Hey guys, how to identify and treat the wedge pattern. In this video, I will show you how I treat the wedge pattern. I will share with you my wedge pattern trading strategy. Also, we will discuss important theory and important tips. Please don't forget to like this video and subscribe to my trading view page. So traders, let's start with the basics. What is the idea behind the wedge pattern? Let's start with the falling wedge. Imagine the situation: the market is trading in a bearish trend and the price keeps sitting low and low highs. You can see that even though the market here is very bearish, even though we are trading in a bearish trend, if we add the trend lines into the equation, you can see traders that right here we have a very contracting price action. By the way, it's just the trend lines. You can see that even though we are trading in a bearish trend, you can see that the price action contracts within the boundaries of this contracting channel. And such a pattern signifies the exhaustion of sellers. If you measure the bearish impulses within that pattern, you can note that the bearish legs become weaker and weaker. You can see that after each new consequent test of the resistance of the wedge, less and less and less sellers are selling from that, giving us weaker impulse legs. And the trigger that we're looking for to buy the exhausted market is the breakout of the wedge's resistance. Once the price breaks that to the upside, most of the time it signifies the unwillingness of sellers to sell from that trend line and a highly probable bullish continuation. Preferably, your entry always lies on a retest of a broken resistance of the wedge, and your stop loss is lying below the last low within the wedge, and your target is the closest strong key level. And quite often, our closest strong key level is the initial point of the wedge. Now, let's discuss briefly the rising wedge pattern. So, imagine that we are trading in a bullish trend. The price keeps setting higher highs and higher lows, and it looks like a classic bullish trend. But if we add again the trend lines into the equation, we may spot the contracting price action. We may spot right here that bullish legs within this pattern become weaker and weaker. And again, it is the indication of the weakness of buyers. And the trigger that we're looking for to sell the market is again the violation, the candle close below the support of the wedge. We usually sell the retest of the broken support, expecting a bearish continuation. Your stop loss is lying above the highest point within the wedge, and your take profit is the closest strong structure. Now let's discuss how to treat the wedge pattern on the example. Let's take a look at gold chart. You can see that right here we have a market trading in a bearish trend, and recently the market retested the years low, the price from the doji candle, and next day the market bounced. Take a look what I spotted here on a 4-hour time frame. You can see that even though we have a healthy bearish trend right here, if we add the trend lines into the equation, we may spot right here a classic falling wedge pattern. And traders, you can see that again, this last bearish impulse was much weaker than the previous one, indicating the exhaustion of sellers. And then what happened next with this high momentum bullish candle, the market violated the resistance of the wedge. We closed above that, and now we are going higher. To buy such a market, what I would suggest setting your buy limit order on a retest of a broken resistance of the wedge. Set your stop loss below the lows of the pattern and expect a bullish continuation to the closest horizontal key level. Our closest horizontal key level is right here. Yes, you can see it here. We have a very nice structure that was respected many times in the recent past. So I would suggest that it should be our initial target for the trade. Yes, so let's again just briefly conclude what we discussed. Let's return back to our theory. So wedge pattern is the reversal pattern. Yes, and it signifies the exhaustion of buyers if we are talking about a rising wedge, and of sellers if we are talking about a falling wedge. And the trigger that you are looking for to buy the market is the breakout of the resistance of a falling wedge and breakout of the support of a rising wedge. You trade on a retest, stop loss is lying above the highest point of the rising wedge and lowest point of the falling wedge. Following these rules, you may achieve around 65% win rate traders. Let me know in the comment section what pattern do you want to learn in the next video. Also, please like this video and subscribe to my trading